Thursday, March 14th, 4:18 p.m. New York time. Welcome to Winning Wall Street's Money. If you haven't subscribed to the YouTube channel yet, you want to get notification the day it's posted on YouTube, well, here's the name. You want to get notification the same day the video is released to watch it, join my Patreon page. The link is below in the video description. That's where I'll here in the middle. This is part one of a part 3 series on stock IPOs. This one is going to discuss several stocks that got listed in the year 2020. We're going to see the performance of them now. Companies go listed on stock exchanges for several reasons. Typically, they want to raise capital to grow their company, to buy new machines, tools, hire more employees. Some want to pay off debt. Again, it's public information. It's defined in the booklets, in the brokerages, underwriters prior to the IPO. Again, buying an IPO is before it's listed on the stock exchange. So when people say they participated in an IPO the day it got listed on the stock exchange, that's not an IPO. They should own up. They don't know what they're saying. Because once it's listed on the stock exchange and publicly traded stock exchange, it's not an IPO. Again, IPO is the underwriters are going out on road shows and trying to find institutions to buy the shares prior to the day of being publicly listed. Yeah. You know more now than many other people. Also, there's different stock exchanges. The most prestigious is the New York Stock Exchange. It does a better venting job. So some board members, CEOs, CFOs do not meet the requirements to be listed on their company, to be listed on the New York Stock Exchange because of their history. Maybe they had history of money laundering or fraud. Yeah, there are some people have their companies listed on stock exchange that have a history of that. Why would you want to invest in those? Got it? Yep. So the New York Stock Exchange does a better job venting than some of these penny stock exchanges. It's not that hard to get listed on a stock exchange. It's not. But there's more prestigious ones. There are companies that go for years that never get listed on a stock exchange, and then some decide to. Okay. So we're looking at the 5-year chart. Each candle's a week, because again, the stocks we're going to look at did IPO on 2020, the year 2020. Yep. So here on the left, watch list, US stock indexes, they closed red for the day. And to my fellow traders that are on my WhatsApp alert, I gave you a trade idea before the market closed to trade bearish with options, the S&P 500 that expire tomorrow. So we make some credit and income, bonus money to have for the weekend, because the trade closes tomorrow, expires. But again, enough on that. Let's go back here. Stock index closed red, and the 11 sectors in the S&P 500, 2 closed green. Let's open up the watch list of the stock IPOs. Got listed again back in 2020. A bunch of them are red, 2 of them are green. Makes sense. Most of it is red because the stock indexes closed red. Now the 2 that closed green, well, one could look deeper on that to see what sectors they're in. Maybe they're related to these sectors. Do you know these sectors? Give you some insight. XLK and XLE. These are 2 sectors in the S&P 500. Got it? XLK is technology. XLE is energy. Huge different sectors. We're going to go in these momentarily now. So a 5-year chart, S&P 500. The trend is bullish, outstanding, making new highs for the year. Now we're going to compare them with the individual stocks. Let's close some of these, not to distract you. First one, Airbnb. Do some history on it. Sectors, consumer cycle. I pronounced that wrong. In the industry is travel services. We're going to look at that for each of the underlying. So here's the name of the company. And here's the nation it's from. This one, I want to focus on the sector and the industry because, let's close that one down. You're going to see each of these stocks on the left. At that point in time, when they did the IPOs, maybe their industry or sector was not hot, not the best. Yep. So here, you would have been better off as soon as this stock did IPO, if you invested to today, to bid in the S&P 500. Again, S&P 500 is a winner. Way below the high of 2021. Airbnb. Yep. DoorDash. Here's the high, 2021. Way below it. Again, buying the IPO. Looks like it's pretty much below the IPO. Yep. Let's go back here, Airbnb. So here was the IPO at that point, right there. That red candle. Wow, interesting. So we're back inside the IPO price range. That's terrible. Loser. DoorDash. Here's the IPO right there, that red candle. And we're below it. Loser. Again, the point is, if you invested in these when they did the IPO and got listed on the public stock market exchange, you're out the water. Oh, but let's go back to DoorDash. Sorry. Here we go. DoorDash. No surprise. San Francisco, just like a bunch of other tech companies right there. It's funny how they label themselves in that sector, that in that industry. Next one. Rocket Mortgage. Yep. Here's the high. Back here, 2021. Way below it. Very close to the low of 2024. I've been tracking that company for a long time. United States company out of Michigan, financial services mortgages. Remember, I spoke about that a lot in the past, that company. Yeah, big failure, but not surprised. Pump and dump, hoping to dream. There are better companies than this one in the, okay, look at here. Mortgage financial services. Snow. I've been tracking this one a lot. I'm including it, have been including it in my Magnificent 7. Yeah. So here is the IPO price, that big week right there. A lot of whipsaw, that first candle. That happened to be the same time it made its all-time high, 2020, right up here, $429. And look at us now. It broke below the low of this year, new low for the year it's making. Wow, way below the IPO. Struggles real. Montana. Sector technology and industry software. Again, listen to that. Sector technology. Closed red today. And remember the sectors? XOK, I told you here. That's technology stock ETF. Going to show you some insight now. We're going to look at the 5-year chart of XOK. You could buy that stock ETF. Oops, wrong one. There we go. XLK, just like the S&P 500, outstanding, making new highs for the year. The point is, you would be better off buying a stock ETF that's diversified in technology. Much better off doing this one instead of this IPO. Yeah. Let's go into the next. Whiskey Mike Goff. Here's the stock IPO back here. That was the high, 2021. Here we are below now, below the high, 2023, trending down. Terrible. Terrible. Name of the company. Out of New York. Again, sector, communication services, industry, entertainment. So we already see a few of them here. We've seen that were communication services. 11 sectors, and each sector has several different industries. Point is, this is the loser. Next, Bell Eye Auto. Here's the IPO all the way back there. That same year made its all-time high, 47.77, 47.70. Yep. And then look at that now. Rejecting these highs. A lot of whipsaw. But based on inflation, you would have been losing here. Yeah, the stock IPO would be much better. I mean, sorry, the index would be much better on the S&P 500. But again, let's look at this one too. Out of China, Beijing, consumer cycle, auto manufacturing. Auto manufacturing. Yep. Where do you think it's going to be a one-hit wonder? Wow. Okay. Let's go to the next. X-ray Papa Echo Victor. There's a stock IPO that same year happened to be all-time high. Massive marketing, pump and dump. And look at that. Here's the low since it got IPO and very close down there. It's in terrible shape. Let's look at the information on it. Here's the name of the company. Another one out of China. And same thing, consumer cycle. If I pronounced that right. So both of these two IPOs, consumer cycle. Terrible. Yeah. And let's see if we can do the stock sector. I think it was XLY. Yep, much better. Stock ETF. Okay, let's go to the next. Unity Software. Here's the stock IPO way below it down here. Here's a high of 2021, $210. Wow. Huge consolidation. Yep. Very weak down here. Another software company out of California, technology. We already know the stock ETF, XLK, is performing better. Big difference. So if you bought this one time, same time, the stock IPO, it would have been better here. Keep up with it, ahead of inflation. Yep. And let's do the last one. DraftKings. Here's a stock IPO. Run up for the past 2 years. Huge dump and grinding back up. Still below the high. So when you look at here on the 5 years, look at this real quick again. Here's the high of 5 years, right back here on 2021. Well, the S&P 500 is above the high of 2021. So again, you would have been better off buying. Go to stock index. Yeah, big difference. Let's go look at the stock now. DraftKings out of Massachusetts. Another consumer cycle, gambling. Let's compare it again. It was XOY. Yep. There we go. So even this sector is not a winner. The S&P 500 performing better. The point is, when you're looking at these stock IPOs, the best to behoove you to look at the stock indexes, find the strongest one, find the strongest sectors, see if that stock IPO is in that sector. If this sector is not doing good, why would you want to be in the stock? Stay with leadership. S&P 500. If you're looking to take the risk and go on some of these individual ones, like this, DraftKings, yep, or Airbnb. Well, first, look at that stock, compare that with the sectors. If it's not performing equal or better than the sector, why would you want to buy the individual stock? Yeah. Thank you as always for spending just a little bit of your time with me. That's it for the video. Thanks for watching. Again, 2 more parts will come out later.